Good morning, everyone. Welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. We got an interesting look at some paper money trades for you today, and very timely and very current events, and that's what we're looking at today. First and foremost, let's get through our macro minute. Obviously, this is a big week, but here's something interesting. Not a lot of top-tier economic data, not a lot of top-tier earnings. Sure, later in the week on Wednesday, we'll get Qualcomm and ARM Holdings. That's a good one. Thursday afternoon, we'll get Airbnb and Rivian, and which we cover on this show, and the trade desk pins. Thursday afternoon after the bell is important. Wednesday, Qualcomm, a couple good names is important. Besides that, not a lot of top-tier names coming out with earnings this week. So where's the focus? Obviously, the election on Tuesday and the Fed meeting that starts on Wednesday, ends on Thursday. Remember, it's pushed back a day because of the election, so make sure you understand that. It's a Thursday announcement and press conference this week, and obviously Jerome Powell. Now, the expectations are for them to cut 25 basis points. Not sure why, but those are the expectations. So brace yourself for possible surprises in some of these things, because remember, most people thought he would go 25 basis points. At the last meeting, he went 50. A lot of people think he's going to go 25 basis points here. Let's see what he does. But all the indications, all the probabilities say he's going to cut by 25 basis points. Stay tuned on that. Now, in terms of today, you've got OPEC Plus halting or delaying remember, they were going to halt the cuts and resume production, raise production levels in crude oil. Well, they stopped that. That's why you see crude oil up 2.4% today. So that's affecting, positively some of the energy companies, things like that. The overall market, pretty paralyzed by, kind of a dry powder field going into the election. But here's two names that we're going to cover today that are in the news for different reasons, and we'll cover them. First, Tesla. Our second one is going to be Boeing. First one, Tesla. Now, Tesla. Multiple media outlets, now, you might want to doubt that the minute they say that, are reporting that Tesla sales of China-made EVs fell 5.3% year over year to 68,280 units in the month of October. Now, that data apparently comes from the Chinese Passenger Car Association. Reuters also says month-over-month Model 3 and Model Y sales were down 23%. Now, there's a lot of anticipation, not only with the election, but with overall news. And if you think about it, Tesla, off some of the earnings news and some of the good news there, that stock traded 273. It's 246. And unfortunately, because of timing, that stock traded 238 and change today, just under $239. So it was down about $9 and change at one time today. So that immediately made me want to look at that today. Now, what I looked at here for Tesla was something in the diagonal phrase. So let me just show all. So what I looked at here in Tesla is something in the diagonal family. Why? You want to buy the dip. You want to pick something and maybe scale into a position that buys the dip in Tesla if you're bullish. If you're not, this is not the trade for you. If you want to wait, if you want to be patient into the election, a lot of people are waiting for the results of the election and then they'll make their move. That's a pretty popular, pretty safe way to play the market, pretty responsible. I get it. So in Tesla, though, remember, this is a stock, unfortunately, it's rallied like $7 since I started looking at this morning and deciding to trade this today. So what we can do is, the trade I picked out this morning was the diagonal play, going out till November 29th, buying the 240 call, and selling the November 8th 255 call. Now think about that. Why? Look at the market maker move for Tesla this week. The one-day move, that's tomorrow, $12. The week, just the week, $17 expected move in Tesla this week. So volatilities overall are elevated, especially in the front expiration in Tesla. The expiration month, November 29th, that we're buying is a 59 implied volatility on aggregate. The November 8th expiration, an 83 implied vol. So you're buying lower implied volatility than you're selling. You're buying longer term, selling short term. That there's some advantage there. Now, you still need the stock to go your way, but if you're right and you're directionally right on Tesla, this is one that you're doing it for good levels when you're buying the lower implied volatility, selling the higher implied volatility. Doesn't mean you're going to be successful on this trade. You do need that move towards 250, towards 255. Now, this stock has moved up pretty significantly since we put these trades in and loaded them up for the show. Maybe you want to move it to the 245, 260. That might be something to think about there and switch some of your strikes, but that's for you. The trade we put in here, the 240, 255 for $12. By the way, just to give you a little heads up, where is that trading now? Boy, it's trading probably 13.30, something like there, 13.35, something right around there. So it's rallied significantly off this $12 level because Tesla's rallied several dollars. So the dip buying that we talk about a lot was there in Tesla. Stock was traded below 239, and dip buyers came in and bought Tesla. So remember, it's the strategy that's most important. Using a diagonal play here to buy lower implied volatility, sell the event implied volatility at a higher level. Pick out the strikes, pick out the times, pick out the directions, but the strategy is what we want to learn here today. All right, now there's our first one. The second one, Boeing. Boeing today, pretty important day for Boeing. As you know, they will vote on the 38% pay raise, $12,000 bonus, a ratification bonus it's called. Now, I heard a great interview this morning driving into work, and they were talking about Boeing that really piqued my interest. And the gentleman being interviewed said this: in the Pacific Northwest, where this strike is being held and where the Boeing factory is, deer hunting season just ended. Thanksgiving is coming, and Christmas is coming behind that. Remember, everyone that signs this, when they go back to work, they get a $12,000 cash bonus for signing. Not to mention a now 38% raise. Remember, the first vote was 96% against. The second vote at 35% raise was 64%. All they need is 50% to ratify this. If that happens today, could be something bullish for Boeing. I don't know how bullish, frankly. It's still, it still depends on the news cycle going on in Boeing. So here, the trade that I looked at in Boeing was something in a little more of a, even if it's bad news, this trade has a chance to be still profitable. What did I do? I sold a downside November 29th, same as the long side in Tesla. So I gave myself a little time. Why? Well, the chart on Boeing has some pretty solid support around 150, and definitely the low for several months is about 146. So what I did, I went out, like I said, the November 29th, which is 25 days from now, and I sold a short put vertical. Elevated implied volatility. I sold the 145, 135 put vertical for $1.65. Now it's trading closer to $1.60 now, but it's right in that range, $1.60, $1.65 range. But what this does, it allows you to, even if you're wrong, even if they lose the vote, even if the vote is the new contract is not ratified, this trade can still be profitable because Boeing can go all the way down to not only 145, which is your short strike, but 145 plus the credit collected. So you're closer to 143 and a half, 143.40 on this trade, where this trade breaks even. Okay, so there's why. Now the risk is skewed when you sell a put vertical, right? Because you're collecting about $1.60. Your risk is $840. But if you go out till the November 29th election, look at the 145 put, there's a 74% chance, almost a 3/4 chance that this will finish out of the money at expiration. So it's a high probability short put vertical that collects data and is risk defined. So this is one that gives you the opportunity that even if you're wrong directionally, even if the news is not good, this could still be profitable as long as the stock doesn't break 145 and that 143.40 area. Okay, so this is one that just takes advantage of the high implied volatility, but that has more of a directional play. It's a bigger delta, and any Boeing staying here, right here, or moving down would be negative for that. So 2 trades today. I looked at a diagonal spread, bullish buying the dip spread in Tesla, as it's down some $35 already off its highs, and then a short put vertical, selling into the event, giving yourself some time in that one in Boeing, selling the 145 strike. All right, that's today's Daily Trader. We'll see you every day here on our YouTube channel for the Daily Trader. I'm Kevin Hincks. Have a great day, everybody.